Hey everybody, thank you for tuning in. Joshua Berngard here from Buzzer Real Estate, and I brought along one of my trusted mortgage advisors, Grant here. He owns a company called Motto Mortgage, HPLB. So thank you so much for coming.
Absolutely, yeah. It's a time where everything's changing every week, every day. So clarification is good right now.
Yeah. So, I mean, what kind of brought this up was that last week I helped out a whole bunch of people that have been contacting me that I know that have lost their jobs, that are obviously just really afraid because even the married couples, one has lost their job, one's on a now. I mean, I even have some doctors that have been asked for a 30% pay cut. So there's just some uneasiness in the market right now. And I know that you commented on a few things. So I said, you know what, let's get you on a phone call. So the first question I have for you, and hopes you can help out because I know it actually changed from last week to this week, was about forbearance. Can you clarify what has changed and what's going on as of today, Tuesday?
Absolutely. Okay, so Freddie and Fannie, the secondary markets that the lenders sell the loan to, um, they came out with some clarification saying that what we've all been saying on videos and stuff like that, all of us mortgage brokers, we've been saying, hey, forbearance, if you do it right after you're done with that forbearance time, say it was 3 months, in month 4, you're going to have to pay for all of that up front. So say you had a $3,000 mortgage, it goes into forbearance, you don't pay it month 1, you don't pay it month 2, you don't pay it month 3, but then month 4, you pay your $3,000 mortgage plus the $9,000 that you missed. Now, that is an option still.
The balloon.
Yeah, it's called a balloon payment, pay it all up at the end. So that's still an option, and if you can do that, that's what's going to be best for the lender, and so they're going to prefer that you would do that because then obviously you're like back on track immediately. And quite honestly, if you go into forbearance and you can do that, I recommend you do that. Just get right back on track. And actually, to backpedal, I recommend if you don't have to go into forbearance, don't go into forbearance.
Sure.
So everybody's asking, hey, should I do this or not? Really, if COVID-19 did not put you in if you're in a position where you can cover your mortgage and maybe COVID-19 affected you, reduced your income or something like that, but not enough that you can't cover your bills, keep on track. We don't have any, I don't have any hard evidence saying that this is going to affect your credit, but we have anecdotal evidence. We have people looking at their credit scores and saying, hey, I heard that this wasn't supposed to affect my credit, but my credit dropped 40 points after I went into forbearance. Why did that happen? And so in the CARES Act, where this forbearance came from, the CARES Act of the government, the $2 trillion stimulus that they put out, in that wording, it says that the lenders cannot put, or the servicers cannot put anything negative into the wording, which true, they cannot. But they can write, hey, this is a loan in forbearance. It's not technically negative, but it's saying this is a forbearance loan. And so just having that F on that loan could possibly affect your credit, and that's maybe what we're seeing by these anecdotal events with people chiming in saying, hey, I think that this affected my credit. So if you can avoid going into forbearance, which is, basically pausing your payments for a certain amount of time, I recommend you do it because, what if you want to get a loan in 6 months or 12 months from now, or, you want to do a refinance? You want to always keep yourself in the best credit position.
Now, one of the other things that I did talk about, and I want to make sure, is I told everyone to get this in writing, by the way. I said, you call your actual bank, whoever's holding the loan, and say, listen, if you can't do the balloon or you don't think it's possible, say, listen, I want this tacked on to the end, or I want to add $300 when this is all over to each one of my payments, and I will slowly pay off what I have. These are still other options outside of this balloon if the need for forbearance is there. Is that not correct?
Yes, so you have 4 options. So these are the
Okay.
4 options you have. So 1, you have that full repayment. Okay, so that's known as a reinstatement. So that's where you pay back the missed payments and quickly get back on track. This is what we were talking about before. This is that balloon payment,
Correct.
Where
Yes.
all of it in full, say you went 3 months, month 4 you would do it. And then just so everybody knows, you have per cycle, you have up to 6 months. You can say, hey, I need a forbearance for 6 months. And then 30 days before that 6 months lapse, they'll call you and check in, hey, do you need one more 6 months? And so you can do up to 12 months. They won't talk about that up front. That's actually not in the writing because they want people to do as few months as possible, 1, 2, 3. But just so you know that's what's possible. Anyway, so that's the full repayment. Second option, you can do a repayment plan. So that's what you're saying is, hey, we're going to have a conversation with the servicer that after this forbearance period, hey, let's put myself on a repayment plan. Maybe I'll pay $300 extra from what my mortgage has been, and so over a certain amount of time, I'll actually catch up with those months that I missed. So that's what you were just talking about that repayment plan.
Correct. Yep.
And then what you also mentioned was that deferral. So the payment deferral or the loan mod, the modification of the loan. So that keeps your monthly payments consistent, but it's going to add those missed payments all the way to the end of the mortgage. So, say you got 12 months worth of forbearance, you're supposed to have only 17 years left on your loan. Well, now it's going to be 18 years because we're just going to tack that on to the end of the loan. And that might be either just keeping everything the same, tacking it on later, or modifying. So let's talk about the fourth one, the modification of a loan. And this is a different kind of mod where you're going to actually reduce your original monthly payment amount. So say you did have a reduction in income or you lost your job or something like that. You're going to have a conversation with the servicer, say, I just can't afford what I was paying before. Can we figure it out and modify the loan so I'm actually paying less than I was before? And that might change the length of time of the loan or something else, but it's a modification in order to lower the monthly payments lower than it was originally. So those are your 4 options, and those are pretty good options. It really sounds like the lenders are really there to work with you, and the CARES Act was really set up so that they have some leniency to get on the phone with you and work out everybody's particular unique situation and say, okay, how do we get this done for you so that we have the fewest amount of delinquencies as possible?
Got it. All right. Thank you for that, because that clarification, I want to make sure everyone's there. And then the other thing is I'm following the stock market. I see what's going on with the federal rates. So why are rates cost more up front, if you will, or why are they costing? Because they should be probably in the 2s from what I'm seeing. Talk to me about and us about that.
Okay, so yes, if you look at the bond market, if you look at the different parts of the market that usually mortgage rates correlate with, the correlation is all off. And you're saying, well, why does this seem like that? Usually, if I can do this on my computer, I'm a little stock market, line, and usually the correlation is down here, but lately it went like this. It's way up here, and that margin difference is 100 bips. Now, bips are like percentage points, so it's 1 percentage point. So when you look at the market, we should be down in the 2s, like high 2s, maybe even mid 2s, but lenders can't do that right now. They're still giving you those mid 3s because...
Which is still good. Let's be
oh my gosh.
That's still great. To borrow money, I can't get my credit cards underneath 11 at my best
historically, that's incredible. I still call it free money. It's like, if you can get anything for 3.5 percentage point, my gosh, you're getting free money for 30 years. For sure. So, but why is that? And now, if anybody tells you that they absolutely know the answer, they're lying to you. Nobody knows what's going on right now. This is what I think based on my experience. I think because of this forbearance plan, so investors that invest in these loans into these markets, they first and foremost over everyone else, they get their money, right? You cannot not pay an investor. So the servicers, they have these loans coming in, and then suddenly, somebody went into forbearance and the loans stop coming in. Those payments stop coming in. But the servicer still has to pay that investor. Has to, no matter what, even though they don't have money coming in. So in order to cover that cost, saying, hey, we know a whole bunch of forbearances are about to happen, and they are already, almost 4 million have happened already. Because those are happening, they're saying, okay, we need to create a margin to cover our possible losses. So that's where that 100 bip margin is coming from. They're saying, why don't we charge a little bit more for these rates so that when these forbearances actually happen, we won't go out of business because we don't have
safeguarding themselves. Okay, so they're running a business, they're safeguarding themselves. Okay. But like you just mentioned, literally, let's say even 4%, which obviously if you have horrible credit, you're getting into the fours. I still say, and I'm just asking you, I think it's still a great time to buy because you already mentioned this in here. It's like free money. Would you say right now is still a great time to buy?
Oh my gosh! If you can pass the qualifications, it's a fantastic time to buy. So
it is. Yeah.
Then let me talk about the qualifications just really quickly.
Yeah, please.
It is tightening up. Okay, the requirements is just like after the not just like, but if you remember right after the crash, 08, 09, everything tightened up where you had higher requirements. You needed a higher FICO score, which is a credit score. You needed maybe more money in reserves saved up to get that loan. Those things are happening again. So, maybe the person with the 550 credit score, maybe I can't get him an FHA loan anymore.
Correct.
But 2 months ago, I absolutely could. And, also things are going away like renovation loans or these really fun loans where I get to use the money for, making a new kitchen or certain jumbo loans are gone too. So the requirements are really tightening up on what loans are available, but also who can qualify for loans. So if you are a person that can qualify, and that should be, send a call to Josh and his favorite loan originator, or send a call to me, and we'll work out and find if you can qualify. But if you can qualify right now, like I said, this is free money. This is a great time.
It's awesome.
Super low rates. In the 3s and the 4s, I don't know how long that's going to last.
And I'll tell you from the market standpoint where I am, if in fact you are looking, I am seeing. I just closed a deal 3 days ago, and we got literally 9% off the asking price. So there are some great deals. Exactly, there are some great deals going on right now where, in fact, you have a vacant house, someone's in this predicament. There are deals to be had. And there's people that need to move. We're talking about transferring. We're talking about loss of jobs. We're talking about in general. They were playing with the idea. I'm going to wait for summer, but now they're like, I can't afford 2 mortgages, especially in this day and time.
Right, because at first we thought that this was going to be, hey, 2 months is going to be really bad, and then market will pick right back up again, and everybody will be out shopping. But now those people that really need to sell their homes, they're going, oh, this might last a little longer. We don't know, how is this going to affect people? But they still need to sell their house, and so it's on the market, but maybe there's not as much competition looking at that house. Maybe this is the time where you can go out there and get a deal. So that's fantastic if you're looking for a home.
Yes. Thank you guys for tuning in. Thanks for watching. We'll repurpose this. Thank you again, Grant, for your time and your expertise.
Absolutely, yeah. Wow, we should definitely do this again because I'm sure in a few days everything's going to change.
Maybe next week, yeah. There's an update. I want to know about it. We can do this every 2 weeks. That's fine.